Hi, welcome back to another edition of Lippers Fund Flows Insight. My name is Tom Roseen. Thanks for joining me today. I'll be reporting flows for the week ended May 4th, 2016. Investors actually had a lot of fear on the table this week. We saw the Dow actually post one of its worst days in over 2 months during the beginning of the flows week. And this was certainly on news of poorer than expected earnings reports that were out there, particularly from the likes of Apple and Intel and other technology firms. Really kind of spooked the markets overall. We also saw lower than expected economic reports come out as well. So investors were generally concerned on that. And then last, I think they put a pall over the market as a whole as we saw that oil prices slipped again under $45 in the $43 a barrel range, which again is above the 40s, above 30, but again it's just started to back off a little bit. I think that concerned folks. So let's see how that impacted the flows for the week, looking at our macro group first. If we take a look at the macro group, equity funds saw about $1 billion in outflows. Taxable bond funds, though, saw inflows of $1.7 billion. Muni Bond funds saw about $600 million of net new money come into their coffers. And money market funds saw about $6.5 billion net new money come into their coffers. And this is after several weeks of outflows out of money market funds. And we really attributed most of those outflows to taxable events, right? We had people paying Uncle Sam both in March and in April. So a little bit of change there. So obviously positive flows, about $7.9 billion for the fund industry as a whole. Let's take a look, though, at equity funds and how they all stacked up, because there was a really kind of a dichotomy there. We saw about a 2.52% loss in all equity funds. Second consecutive week that we've actually seen negative returns, and it's the 8th consecutive week we've seen outflows, about $1 billion this time, out of the conventional fund business. Now, if we break this out, this is where the head scratcher occurs. Domestic equity funds saw about $1.9 billion outflows. 13th consecutive week they've seen outflows. People have just been running from the large cap arena. I'll give you a little more detail on that. But ironically, even though we had some concern overseas, we had poor manufacturing numbers come out of China and the like, we saw non-domestic equity funds once again take in money, about $900 million of net new money coming into the group. This is the first week in 4 that they've actually seen net new money come into that group, though. So it's been off and on, but again, a little bit of a head scratcher. If we break this down, though, and we look at non-domestic equity funds, they saw a 2.72% return. So while the non-domestics, or the domestic actually did a little bit better, they still lost money. Non-domestics lost quite a bit more, at least 20, 30 basis points more, but still saw net inflows. Large cap funds, like I said, saw the pariahs share leave, $2.1 billion as far as net outflows there, and international funds saw about $1.1 billion of inflows, and ironically, emerging market funds saw in the hundreds, $130 million of net new money come to their coffers. So not a lot, but again, really kind of a head scratcher that the domestic investor, U.S. investors are actually taking that approach. Let's take a look at equity ETFs, though, to see how that panned out as far as flows goes. For the third week in 4, we've actually seen outflows. This was a huge one, $10.2 billion. And the top of the group as far as taking in money was Spider Gold. There's a little bit of fear out there. Obviously, we've seen a drop in the U.S. dollar as well, and we've seen the commodities actually take a big jump, both oil over the weeks and months, and also, of course, gold taking a big jump as well. So Spider Gold saw about $0.9 billion net new money come into theirs coffers. We saw the MSCI emerging market. Remember, I told you there's been some flows into that, actually taking net new money as well. They saw a little bit of money coming to that group as well, about $403 million. And then at the very bottom of the group, we see why we had such big outflows out of this group. We saw the SPY, Spider S&P 500, actually lose $6.3 billion, and the Power Shares QQ Trust number 1 lose about $2.5 billion. So that certainly was the big outflows. And for QQQ, that was the second largest outflow that it's had on record since 1999. Actually, since 1992. I'm sorry, 1999. That's correct. But really, the largest outflow that we've seen out of this group actually occurred on January 9th, 2008. So this was the largest outflow we've seen from this group in quite some time. Let's take a look at fixed income funds to see how that actually group panned out. For the 5th consecutive week, we've actually seen positive flows, $1.7 billion. So investors have been in the tune of putting money to work in there. It's the first week in 12, though, that we've seen negative returns, this time only to the tune of 0.18% negative return. So not a real lot to write home about. The big attractor of money was the corporate corporate investment grade debt funds. They saw about $1.5 billion of net new money come into that group, and it's the 5th consecutive week that they've actually been attractors of assets. Balanced funds was the second group that actually took money. Very small amount, about $245 million came into that group, while flexible portfolio funds handed back the largest with about 297, and then we saw some treasuries add back a little bit of money to hand back a little bit of money. If we take a look though at the ETFs now, that's a little bit of a different story. We saw outflows in this group of all, about $565 million. This is the first week in four we've seen outflows out of the ETF group. But if we look at the top of the group, very much in line with what happened on the open-end group, iShares, iBox, investment grade corporate funds, ETFs actually took in money about $507 million, and the iShares TIPS bond fund ETF actually took in about $423. Now at the bottom of the group, we see that there was a risk off here. iShares, iBox, high yield corporate investment grade high yield corporate debt ETF funds lost about $1.5 billion. So that was the big pariah, dragging down that group and causing them to actually go into negative flows for the week. Let's turn our attention now to muni bond funds. The party continues. $607 million net new money coming into that group. 31st consecutive week of net inflows, and then for the 7th week in 8, they had positive returns, this time for the week of 0.45%. That's actually a very respectable return for 1 week period. If we take a look at a little deeper dive, take a look at national versus single states, national munis took in the lion's share, about $497 million. However, the single states were still positive, so that's encouraging. It's the 31st week as well that the national munis saw the biggest inflows of both groups, single state and national munis. Well, let's turn our attention now to money market funds, the last group. And for the second consecutive week, we've seen net inflows. $6.5 billion this week came into the group. How it breaks out, if we take a look, taxable money market funds saw about $7.3 billion of net new money come into that group, and tax-exempt money market funds saw outflows of about 0.8, so $800 million in outflows. If we broke that down, though, for the taxable side, we see that the institutional money market funds actually took in about $3.9 billion, whereas the retail money market funds took in about 3.4, so it was about an even split. We haven't seen that for a while. Usually there's been this big movie, the institutional pulling money or adding money, and retail kind of usually doing just the opposite, so we had a little bit of a split here as well. Well, that does it for me for this week, but really what we're going to be looking and keep an eye on. This morning we heard that the non-farm payrolls actually came in at about 160,000, and Wall Street had, best estimates actually had about 203. We'll have to see how that impacts investors' psyche over the next week. Well, if you want to do a deeper dive and check on areas that I haven't covered, you can go to our site, www.lipperusfundflows.com, or join us next week where one of our analysts will talk about the flows for the week. Thanks for joining me. My name is Tom Roseen. I wish you the best in your wealth planning and creation.